Hey guys, this is Muhab, and Tesla is officially the most expensive automotive company in the world, exceeding Toyota's market cap. The stock is at $1,000. $1,000 US. That stock was literally under $200 like a year ago. Insane amount of profits was made, and losses if you were shorting the stock, of course. Anyways, in this video we will briefly discuss why Tesla stock price shot up over $1,000 and why did I sell the stock at the price of $800-ish and when I will be selling more. As always, grab your cup of coffee and let's roll the intro. Tesla stock price reached $1,000 for two main reasons. The first reason is that Musk sent an email to staff that it's time to go all out and bring the long-delayed Tesla semi-truck to the market. This email was sent after Nikola Motor Company, which is a startup that makes, or planning to make, hybrid trucks. Anyways, the email was sent when Nikola Motor debuted in the stock market and achieved a strong performance in the first week of it being in the stock market, almost doubling in price. Nikola's debut on the stock market apparently got Elon Musk's attention, and as a result he sent the email to go all out and bring the semi-truck to the market, and that boosted the stock price. The second reason is that the billionaire investor Ron Barron said that he won't sell his Tesla stocks in a CNBC interview, and he said if anything he may even buy more.
When I have something like a Tesla, I told you a long time ago that I thought that we would make 20 times our money in Tesla. So far, we've made 4 times. I now think we're going to make double or triple again over the next 5 years, and double or triple again over the next 5 years. I think there's 10 times more to go in Tesla before I have to even think about this, if we're right.
Those are some quite impressive returns for a period of 10 years. Also, fun fact, Barron is also an investor in the private company SpaceX, and he's also expecting SpaceX to at least 20x over the next 10 years.
And SpaceX, so we've just been investing. SpaceX is a private company. We've invested 180, we invested 130 million, I think, 125, 130. It's now worth about 180. I think we're going to make 20 times in SpaceX, over the next 10 years. That is an amazing opportunity as well.
As a result of these two things happening in the same week, Tesla stock price skyrocketed to unprecedented levels. Some may make the comparison of cars sold by Tesla and Toyota, which is the company that Tesla overtook in market cap size, to see whether Tesla is overvalued or not. And if you only look at it from that point of view, then Tesla is extremely overvalued. Toyota sold 10.7 million cars in 2019, while Tesla delivered just over 350,000 cars in the same period. Toyota delivered 30 times more cars than Tesla in 2019. In addition, Tesla has a forward PE ratio of almost 300, while Toyota is at a forward PE ratio of just 13. But is Tesla only an automobile company? Well, obviously not. Tesla is much more than that. I made tons of videos about Tesla and why it's not just an automobile company, and how there's a good chance it might dominate many industries, from pioneering in future of cars, aka electric cars, to dominating the renewable energy sector and autonomous ride hailing. I highly advise you to watch What Will Tesla Be Worth 3 years from now, where I explained in detail which industries Tesla may dominate and why there's a good chance it will dominate these industries. And fun fact, this was the most viewed financial video I ever made on the channel, of about like 5,000 views, which is quite good for our channel. And I think it's one of my best videos since it had that much views, so I think you're gonna like it. But just for the sake of this video and for reference, take it this way. Despite Toyota's low PE ratio, Toyota has a PEG ratio, which is price to earnings to growth ratio, of 8. That demonstrates that the company will barely show any growth, if any, to begin with. Now when it comes to the PEG ratio, the lower the number, the better. Tesla has a PEG ratio of 2.8, which shows an expected growth annually of 40% plus over the next 5 years. A huge number. Now this is just one metric. There are a lot of other metrics and details that you should know about, especially because Tesla just recently started making profits. But as I've mentioned before, rather than talking about them in detail here and make this video a 20-minute long video, I highly urge you to watch Where Will Tesla Be in 3 Years video if you're interested in a detailed analysis of where Tesla will be in 3 years from now. Okay, let's talk more about why I sold a portion of my Tesla stocks. But first, let's talk about when do I, as a long-term growth investor, sell a stock in general. I sell a stock as a result of one of four main reasons. The first reason why I might sell a stock is that the reasons I bought the stock no longer apply. For example, a competitor started offering a superior product, or growth has slowed due to management issues, or maybe profit margin of the company has drastically reduced due to an early expiry of a patent. The second reason why I might sell a stock is that I may have missed vital information when I did my analysis. For example, a patent that the company had that allowed the company to achieve high profit margin, but it will expire quite soon and I didn't know about that. Or a competitor with an advantaged product that I haven't noticed. Especially if there's a startup or a small company that is achieving something with a competitive advantage and I haven't read about it. That's why I try to do a very intensive research of the company's competitors that I want to invest in. Because in general, when I want to invest, I usually look into a sector first. For example, if I felt like my portfolio needs a company in a medical sector or a pharmaceutical company, etc., then I start looking into companies. So if I found a more advantaged company in terms of products or efficiency or management, then that's a plus for me. I might invest in the other company and that would be a better thing for me. That's why the research of competitors when there's a company that you like is really important, because you might change the company but stay in the same sector, and that's how I do it most of the time. When I find a company that I like, I look at the competitors really well and find which one is pioneering in that sector. The third reason why I might sell some of my stocks is that if I found a remarkably better investment in the market and I don't have extra cash laying around. In this case, I may need to close some stock positions I have or trim some of my positions to buy that remarkable investment. In other words, it's a valid reason to sell a good stock for a better stock. But personally, I think that is rarely going to happen for me, as I always try to keep 5 to 15% in cash in case I saw a great opportunity to utilize it. The fourth reason, and the reason why I sold my Tesla stocks, is that I needed to rebalance my portfolio. Back when Tesla was around $200-ish per share, Tesla was the largest position in my portfolio. And as the share price almost jumped by 4 times, the position size in my portfolio naturally 4x'd. It reached a point where my Tesla position was so large to a level where the daily movement of Tesla stock dominated my stock portfolio. So if all of my stocks were up, but for some reason Tesla stock was down, then my portfolio will be down. So for risk management reasons, I needed to cut my position to the levels where I am comfortable with. Although Tesla has a great reward in front of it, there is no doubt that there is still risk involved in it, and there is no doubt that the stock is very volatile too. I mean, 4xing in a matter of months demonstrates how volatile the stock is. So, as the stock went up in price, I started slightly trimming my position to ensure it's at the right percentage of my portfolio. Currently, Tesla represents just above 10% of my portfolio, which is a percentage I'm comfortable with. Although I might consider trimming it more if I felt that my portfolio is too volatile as a result of Tesla. If you're an individual investor, that huge volatility may not be a big deal for you. However, as an eToro popular investor, I am responsible over my funds and other people's funds, and I need to make sure that my portfolio is diversified enough to reduce its volatility, while at the same time ensuring maximum growth with the right risk tolerance. And that was the main reason of me selling my Tesla stocks. My growth thesis about the company and the management strength still stands, and are even improving to levels I wasn't considering, as we saw with the release of the Cybertruck, for example, or Tesla raising $2 billion to ensure they're healthy financially, especially as the stock price elevated. And surprisingly, they raised these $2 billion just before the pandemic hit the world, which means they probably used these funds to pay salaries for their employees and pay their liabilities without the need to cut corners or lend more money. So in conclusion, I sold my Tesla stocks to balance the risk reward of my portfolio and to ensure that my portfolio's volatility is not dominated by Tesla stock only, but by all of the stocks I hold in the right proportions I want them to be. Alright guys, that's the end of the video. Thank you for watching. I hope you got something out of this video. If you did, please don't forget to smash the like button and make sure to share this video with your friends and subscribe too. And feel free to write anything in the comments below. I read all of them and try to reply to all of them too. Thank you for watching. This is Mohab, and as always, I am signing out.